Hello there, everyone. Can everybody hear me? Just give me a hi. Welcome. It is 3:02 Eastern Time here in New York City. And what a great day to talk here because this market is wild. I mean, if you're in trades today, I don't care if you went long, if you shorted, today was a wild market day. And so what I'm going to do here today is talk to you, gonna kind of be a little bit more relaxed here because we have some extra time today. Go through the presentation, take our time, answer any questions as we go along, flip back and forth if I need to with the charts, and then talk at the end when I'm done with the presentation about the market today and where I think we're going next. So for those of you that came and don't know me, my name is Melissa Armo and I own the Stock Swoosh. And I started trading in 2008, which seems like a million years ago, actually, now that it's 2022. But I didn't make money when I started trading. I don't think anybody wakes up one day and starts to trade and makes money. I mean, while there is a possibility that somebody could have done that in their lifetime in this planet, the fact is most people, when they begin to trade, lose money. They don't know what to do. So today we're going to talk about really what is important is how you can make money trading. Because even though trading's fun, it's fun to press the buttons. It's fun to read charts. It's fun to participate in chat rooms and make friends that are traders. At the end of the day, the only thing that matters, the only thing that counts is that you are winning. So you have to have more winning trades than losing trades. The difference between the market we're in right now is that the market is really connected to overseas events. And some of you actually may be overseas, but trading the US stock market. But every single market right now is really tied into what's happening, obviously, with the Russia-Ukraine, I don't know if you want to say war or if you want to say conflict. But it's going on, it's going to continue. I do not think that this ends today or tomorrow or even next week. So as a trader, as an individual trader, you have to find a way that you can make money in any conditions in any market. But I find that in these types of markets, you can capitalize on the momentum and the volatility if you know how to trade it, okay? If you know how to trade it, then you can really make a lot of money during these periods, which again, we have not seen for quite some time. And I don't think it's going to end because the Fed is going to increase interest rates this month. They're talking about 0.25%. If they decide to increase it 0.5%, that will create more volatility. So there's all kinds of interesting things going on right now. So let's get into it. So if you would like to contact me after this presentation, if you would like to try out the live trading room for the rest of this week, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP if you have questions, or follow me on Twitter, Facebook, YouTube, or Skype. I do appear on TV in between trading and teaching. It's one of these things where right now I'm not back in the studio yet. I'm still doing it from my home, which is actually very convenient for me because I can jump onto Skype and I can talk on television about the markets. And again, it's been a volatile time. People are worried. People are seriously concerned. Was at the hairdresser, I was at the salon last week, and my hairdresser said, oh my God, I'm worried about my 401k. And I said, listen, if you're not going to retire in the next 2 years, I wouldn't worry about it. But people are starting to get scared. And you can see that with the selling that we've had just really in the last several days. And I'm going to put in here at the beginning, even though I have this at the end. If you decide you want to come and learn and sign up for my services, the next class is March 26th and 27th. You can email me if you want to sign up for this class. You cannot do it through the website. Again, I'm going to talk to you about what I do today, but I'm putting this at the beginning in case we don't get to this at the end. And I am doing a webinar special for David and all of his people. If you sign up at the end of this week by Friday for the class at the end of March, you the trading room free to the end of the year. And again, you can come and do a trial this week and email me if you want, Wednesday, Thursday, Friday, and be in the room. Now, if you want to do options, I do options too. I have 2 subscription choices for people. One is 6 months, one is 12 months. Again, if you want to sign up for that, the second you sign up, you start getting the trades. I will say that we have had a huge success in doing options this year. This market, particularly because of the volatility, has made for some great options trading. Because again, when you're doing options, when you get momentum and volatility, if it's going in your direction, you can make a lot of money. And we've been lucky to get that. But it's all about the picks, and it's about the direction. It's about getting the timing right in options. We'll talk about that more in a bit. So anyways, why are you here today? You know, on a 3 o'clock on a Tuesday afternoon, either you're completely bored and have nothing else to do, or you absolutely have a purpose for being here. And one of those purposes may be that you really actually genuinely want to trade. You really want to make money in the market. You're not making money in the market. You really want to figure out how to do it. You need a new trading strategy. You are not doing one that works. And again, this market may make it difficult for you because if you don't know what you're doing, you could be losing. So losing is a problem. And I say to people, if you're losing, if you're bleeding money, you need to stop, take a step back. There's nothing wrong with taking a break from trading. And again, it doesn't mean there's anything wrong with you. So many times people blame themselves when they lose. While you may have made a mistake, that's true. Sizing yourself, exit, something like that. The reality is that it may just be that the strategy that you're using doesn't work. Maybe it never worked, or maybe it's not working right now. Do you understand what I'm saying? In these conditions. So the best thing you can do, instead of going heavier in or doubling down, which I know people love to do, traders love to double down. You can't do that when things aren't working. So be smart enough, seriously, to take a step back and say, wait a minute, let me reevaluate. It doesn't mean you have to quit trading forever. It just means that you're taking a little bit of a break. You might be here also because you're new and you never traded before and you don't know where to start. I have that with some people too. I have some people that have started trading with me this year that have never traded in their life, and they started out in a demo, and that's okay too. Trade in a demo till you get used to it, till you figure out what you're doing, pressing the buttons so you don't press any fat fingers. Then once you know what to do, then you can trade with live money. And again, getting back to what I was saying, at the end of this lecture, we're going to talk about the market volatility, and today was really just a great day for that. And again, I don't know how we're going to close, to be honest with you. I gave a couple of different scenarios how we could end up the day when I was running the trading room this morning at 9:30, right before the open, we were talking about it, but it's 3:09. We will be here after the close. We will look at what happens after hours tonight. We can talk about it because I'll be here. But the fact is, I don't know how we end up today. So that'll be interesting too. And we'll talk about that if you want to stay around for the next hour. But anyways, right now, people are so concerned about so many things. They're concerned about their 401ks. They're concerned about market volatility. They're concerned about inflation. So people are in this weird situation right now. We're getting out of COVID, or at least here in New York, we're finally getting out of COVID. But some states, some places across the world have already been out of COVID, not New York City, unfortunately. I hope this is the end of the line for us and we're finally going to get through it. But people are now getting worried about something else, not COVID, but inflation or market volatility. I don't know what it is. What people just feel when their 401k, when they get this statement every quarter and look at it, or at the end of the year, if you look at it at the end of the year, once a year, people feel wealthier when their retirement savings is growing. Again, they're making money without doing anything. If you were invested in the market prior to the 2016 election, actually, the market went straight up. This was, and I'm going back a while here. I'm going back to 2016. We gapped down on that morning, the day after the election. Trump won. The market just went straight up. We made a million new highs, 2017, 2018, 2019, 2020, then COVID hit. Remember, we dropped off March 2020 in COVID. That was still nowhere near the 2016 lows. So really, if you've been in the market from 2016 election, day after and beyond, your retirement account has exploded because we've had so many new highs in the market. And again, many stocks, and I could list them all, have continued to grow with the market. Now things have changed. And again, going back to what I was saying, for some reason, when people, even though it's not real tangible money that they could take out right now without paying a tax penalty to do so before the retirement age, people feel wealthier when the retirement is growing. They tend not to be worried about money. They tend not to worry so much about inflation. And now we're in the situation where the market started to sell off. Now we have inflation, increased interest rates, market volatility. It's kind of like the perfect storm here for people to be concerned about things. Everything is going up. Food, gas, housing. You've seen housing go up ever since COVID. And again, looking at New York City, that's so crazy to me because I can't even explain why housing went up here in New York, because it's still such a disaster here right now. But in a lot of places, even Pennsylvania, where I'm from, I mean, I can't believe the prices that they were getting for houses back since COVID. But things are going up. Do I think it changes anytime soon? No, because the underlying reasons for why we're in this environment, there's no reason to expect that it's going to change because nothing is changing. The administration that's making some decisions, the economy, things that are happening, nothing's really a set decision that's going to change the reasons for what is happening right now today. And this has nothing to do with what's happening overseas, but again, that plays into it too. So right now, You, me, everybody that's out there, people are looking for extra ways to make money, probably more so than any other time. While there was the stimulus package that happened within the last year and a half, that's pretty much going away, okay? So people relied on that. Now that's gone away. And again, people had to go back to work. If they were out of work, people must go back to work, but people still need more money. And they think, well, I would like a second income. What can I do? What can I do? The nice thing about trading is that you can do it for half an hour a day. If you want to day trade, you can be in and out between 9:30 and 10 a.m. in the morning. You do not have to sit between 9:30 and 4. In fact, I prefer not to do that, and I rarely do. Now, yesterday I did a short in the market late that I held into the close, but it's rare that I do that. The market power trending yesterday, again, we will discuss the market in the second hour, but the fact is it's very, very rare for the market to power trend. I would say there's probably about 5 or 6 days a year that the market power trends. And when I say power trend, it doesn't mean go up or down. It means either direction, meaning that a power trend is something that happens and goes all day long, where the market opens at the low in a long and rallies all day and closes at the highs, or vice versa in a short. That up or down is so rare. You're not seeing that today, for example, but you did see that yesterday in the market. Normally, if you want to do options, if that's something that you're looking to do, like I talked about earlier, you do not have to sit at all. You get the trade, you put in the trade, you take the trade into the open, and you can put an immediate sell order. It's a cancel day order, it's a limit order where the trade will sell out if it hits the number that you put to sell it at. And if it doesn't, you're still in the trade. So again, you don't have to watch it. What I find so interesting about 2022 is people are coming to me from all walks of life wanting to trade. Now, most of them are looking to do options for whatever reason. They find that easier if they have another job. But I literally have so many different people doing so many different careers that I almost should make a list because, for example, I have a gentleman that's a trucker. I did not know this when he signed up. He is in his truck delivering packages all day long. I'm not going to say the company he works for, but he's trading. He's trading options. I said, how are you doing that when you're out in the truck? I mean, it's different if you're in an office and you put the order in or something. You go back and check it. He's on the road. He's on the road all day long and he's doing really well. And so he has his computer in his truck and he's trading. Figure it out is what I say. No matter what your career is, no matter what you're doing, don't think you can't do this. You don't have to put a lot of time to doing it. It's something that you could do right now. And then as you get better, you could do it maybe full time later on. But again, people are looking to do extra things to make extra money. And so again, it goes back to the same thing as I was talking to. How do you make money in the market? How do you do it consistently? That is where many people struggle. And that is one of the problems that many people have. Things that they were doing in 2020 or 2021, ways that they were trading are not working now because the market has changed. So learning what to do is very important. I think it's important in any type of market environment, but I really think it's important when risking your own money if you want to trade at all. And I know that everybody just wants the quick buck. They want to go into a Reddit chat room, get an idea, have it work, make money, be done. The idea is that you want to be able to learn how to do it. While I offer subscription services where people aren't learning, they're just getting the trades, I really think that learning is important. I think that you will trade better if you know what to do, and I think you will make more money and you can risk more if you know what to do. So, I mean, it's totally up to you. The trucker that I just gave the example, he has not done any classes yet at all. One day he probably will when he has time, but for now, he's just taking the trades. I do think it's important, though, for people to learn. I really think it makes a big difference long term in how much money you make. So this is the chart. I clipped this from today. Obviously, this is almost 2 hours ago. It was around 1:30 in the afternoon. This is a QQQ daily chart of the market in 2022. So let's just take a look at, I'm just going to go all the way back to the beginning of this year. Here we go. So again, this is January 3rd, we started up. So the market, and again, take it up to the left. The last time the market made a brand new all-time high, and I'm talking about the QQQs here. We'll talk about the SPY a little bit as well. The last time the market made a brand new all-time high was basically, I think it was Thanksgiving week. Yeah, it was 11/22. So November, December, January, February, we're into March, 4.5 months ago, basically. That's a long time for this market. If you have been participating in the market, if you have looked at a chart at all, if you've been trading actively like we have, I can't tell you the last time the market went 4.5 months without making a new high. I cannot think. And again, I probably would have to go back to prior to 2016. seriously. So the market's been on a tear, and now all of a sudden it's not. Is the market in a downtrend? No. Everyone's screaming on TV today and yesterday, and I wasn't on any channels today or yesterday because I was too busy trading, but everyone's screaming we're in a bearish market territory. That is not how I see it. So as the stocks swoosh, the rules, the things that I look at, that is not how I see it. I do not look at things as percentages. I 100% disagree. If I go in anywhere tomorrow, I will say that exact thing. But people are saying that. And obviously when people watch the news and they watch TV and they get scared and they hear that and they don't know anything about the market or trading or charts, they worry then about, like we talked about, their 401k, their investments, and everything else. What you see right now, even here today, and in the last couple of months since the beginning of the year, how much the market has changed since 2022. But getting back to what I was saying about following your dreams, working for yourself, just like the trucker guy, it's possible. You know, if you have things that you want to do, sometimes you got to do the work. What is the work? Figuring it out to make the time in your life. You know, spending the money to sign up for a service, spending the money to sign up for a class, spending the time to learn in a class, opening up an account, going through all the process of the paperwork, learning how to press the buttons, trying to figure out in your lifestyle how to make time to do this, even if you have 2 kids, a job, and everything else. The reality is the work sometimes is just trying to figure out how you're going to do it, how you're going to make the time in your schedule and in your life. No one said it's easy to just all of a sudden decide to up and do and learn something new. That's the process. That's what it is. But you'll be far better if you do it now than fast forward 6 months from now, 12 months from now, when at the end of the day, you're like, oh my God, I wish I would have done this. I can't believe the cost of gas now. I should have started doing this on the side, or whatever the case may be. Because again, before you know it, it's going to be July 4th. I mean, this year I already feel has just flown by. So if you really want to work for yourself, if this is something that you want to do, sit down, get a plan of action together and figure out how you're going to make it happen. But it is possible to work full time and trade and make money on the side. Like I said, there's people doing it. I can name lots of people from doing lots of different things that are doing it. So you can. So don't think that you can't. You absolutely, absolutely can. Getting back to what I was saying earlier, let's talk about inflation, what's going on. So the biggest thing I've seen is food prices and gas prices go up. Now, what happens when gas prices go up? You could say, okay, I live in New York. I actually don't drive a car. I don't drive at all. In fact, I may never drive a car again, and I don't even care. I don't miss driving. Congestion is terrible in New York, and obviously you have to pay for parking and everything else. But the fact is that everything you pay for, even if you don't drive, even if you don't own a car, every single solitary thing that you pay for, the price will go up. Why? Because how are you going to get it? How is it going to get to you? How is the products and services and goods and things that you want going to get to you? People drive them to you in trucks, just like the trucker guy that I just mentioned. So this affects everything. So again, people tend to be more conservative when prices of things go up. It's a regular thing that they get. So gas, if you drive back and forth to work every day, that's something that you can't live without. What else can't you live without? You can't live without food. You have to feed yourself. You have to feed your family. I snipped this from my Amazon cart. I am shocked about some of the cost of things. And again, I live in New York. So this is the most expensive place to buy food, bar none, in the country, even more so than California. Even though gas in California is more expensive, I think, than gas in New York, but it's pretty close. I went to the cart the other day. The organic eggs, 1 dozen in New York City, was almost $8. I said, I called my mother and said, you're not going to believe this. Guess how much eggs are in New York? I mean, I bought them. What, am I not going to eat eggs? Of course I'm going to eat eggs. But it's just the point. It's the point. If somebody has a family with 4 kids, I mean, these things start to add up. You can't live without gas. You can't live without food. These are staples and things you need. So what are you going to do? Again, it goes back to the same philosophy, back to what I was saying, become financially independent, make the decisions for yourself instead of whining, complaining, or getting depressed about it, or wondering when this is going to ever end. The reality is you have to take the bull by the horns and make some decisions for yourself. How you're going to take advantage of the situation, which is the volatility in the market, and make this be a choice that you make for yourself, that you're going to do something else in your life where you have extra money coming in. And you know the way that it is. The prices of things never go down. I've noticed that in New York already. It's not like, oh, you know, once the price of gas goes down and the price of costing to drive the eggs in New York City is going to go down. No. Probably that's going to be what eggs are. Like, that's it. Do you know what I'm saying? Like, prices never seem to go down once they go up. Gas is different. But for different products and things, I've noticed that even big items, like say you want to go buy a washer and dryer or something, even big things that we buy, once again, are the prices of those things going to go down? Probably not. So any questions here as I'm going through? Just look now. Okay. So anyways, let's get into the nuts and bolts again of being practical. We talked about why you might want to do this, why it's important to learn to do this, why you would maybe want to make more money trading. It could be a sacrifice that you have to make the time and the cost to learn how to do it so you can be somewhere in a month from now or 6 months from now with this where it's actually working in your favor, meaning that the money's coming in towards you every week, every month. So I like to look at trading as a bigger picture. I call it chunking it out. $500, $1,000, $200, $1,000, $3,000, like that. I look at it as a big term picture, week by week, month by month. Sometimes when you look at big numbers, people say, oh my God, I could never make 6 figures a year trading. I don't know how to do it. Take it, break it down. If you are willing to just look at it piece by piece by piece, you're going to be a lot better. Even if you take a trade and have a losing trade. I absolutely do have some trades that lose. My win ratio is around 80%. So far this year, though, it has been higher than that because we've had so many good trades. But if you come and take 10 trades with me, figure 2 we're going to lose. 2 we're going to lose. You have to account for that. But it's not the end of the world if you take a trade that loses, if you know you have a high win ratio, that the next one's probably going to win, because it's about probabilities. It's about probability. So it's the idea of chunking it out, having more winners and losers and constantly booking profits along the way. So how can you earn money trading? You have to have a strategy. And this is where I think a lot of people falter. Number one, they trade and they don't have a strategy. They take ideas willy-nilly from wherever. Okay, that's not a good idea. Number two, people trade and do something in the market that they think is a strategy that works. And again, it really isn't a strategy at all, or conditions have changed and it maybe used to work and now it doesn't work. And now it just doesn't work at all. Okay. So these are 2 things that I think are extremely important that people get in the situation where they're doing something. And what is the thing that a lot of people have been doing? Well, they've been buying the dip. If you've been buying the dip this year in 2022, you are losing. Hands down, period, end of story, full stop. Now, again, I didn't have time today to watch TV. There's some shows I could have put on. I could put them on tomorrow, watch the same thing. We'll talk about the market, how it closes today when we're done. But the reality is, let's go all the way back. Here's a daily chart. Take it up. Boom. Here we are. Now, what happened here? If you were looking to buy the dip this year, first of all, buying the dip is not a strategy. It just isn't. A lot of people I'm on TV with do it too. I mean, I would say it to their face as well if I ever go back in the studio, but it is interesting to me how people that are financial advisors actually, which I am not, but people that are financial advisors tell their people to buy the dip too. It does not work. It's not a strategy. Now, it worked in 2020 after COVID dropped, and it worked in 2021 too. Why? Because the market kept going and going and going and going and going and going and going. So it worked most of the time for the last 18 months, and now it's not. But over the life of anything that you do, any stock, anything out of the market, it doesn't work. And I'm telling you that from experience trading for 14 years. But the reality is, because people were doing it last year, they made money going stocks that were strong. They made money buying the dip in stocks that were weak. People made money buying anything at all. And it worked, but it really isn't a strategy. It's not a good strategy, even if you want to tell me, oh my God, it is. The fact that you made money doing it last year, if in fact you did this, does not mean it was a good idea. Now, if you say, well, I have my retirement account and I don't care, it's doopa-doopa-doo. At the end of the day, if I said to you, listen, and I'm not saying this, I'm saying if the market would go to 300 or 275 in the Qs, would you rather buy there or would you rather buy at 330? I mean, even if you say to me, well, I'm in it for the long term. No, many people cannot afford the pain. You're not in pain. Again, like I was talking to the salon at the hairdresser lady, you're not in pain if you've been in the market with your 401k since 2016 or anytime after that, because the fact is the market kept going up. So even though we sold off, and even though you don't like to see the market come in and your profits disappear, the fact is you're still up overall. You're up overall if you've been in the market for years and years and years and years and years. Again, we're nowhere near the numbers that we were. In fact, we've doubled. I'll pull it up and we can look at it then the next hour. We've doubled even since then, 5-6 years ago. But anyways, buying the dip didn't work. Oh, here we go. Didn't work, boom, drop. Didn't work, boom, drop. Didn't work, boom, drop. Didn't work, drop. Didn't work, didn't work, didn't work. Here, this isn't going to work either. So I don't even care how we close today. It's not going to work. So people came in to try to buy the dip today. It's not going to work. So people are losing. And I can tell as a person that runs a trading educational business, I can tell people are losing because I can tell by the communication that the emails that they send to me that are people that are looking to become clients and are looking to become customers, the things that they're saying to me. It's almost like people in this desperation and they don't understand why buying the dip isn't working. It doesn't work. That's why. The fact that it did work in 2021 has nothing to do with anything at all. You got lucky if it worked. Sometimes anything works, quite frankly. I mean, sometimes you can short the strongest stock in the world like Tesla and it would work. That doesn't mean you should ever do that. So, I mean, we're in a situation now where people kind of have to take a hard look at their trading and say, wait a minute, what the heck am I doing? Should I even be doing this? Did this ever work? So you can make money in the market. People do it all the time. However, not everyone does. Why? They simply do not have a strategy that consistently works in any market. And they will often do something that worked one time, even if it didn't work 10 times after that. And they'll continue to chase the one time that it worked and lose 10 times after that because they swear up and down that one time it worked. I think the biggest example of that is GME, the stock. Now, I never played that stock, and unfortunately, I cannot touch it or will never play it again because it's ruined because of the way that it's been traded by the Reddit traders. Nothing in the chart the chart is just a disaster. It's basically flatline now, but because people made a lot of money in that at one point, and I even think that was a year ago now, actually, people insisted that it would work over and over and over and over again. So people have lost money in that since then. It's never done what it did that one period of time. People have lost in it and they don't understand that it's just not going to work. So if someone said to you, okay, you could do this and you could make 25,000, people think, oh, I can do that same thing and make 25,000 every single time. Not if it doesn't really work. So sometimes you can do anything and have it work as a once-off. Do you follow me? It doesn't mean it works consistently. And that's the thing. That's the thing. That's the thing about trading. Making money is about consistent gains every day, every week, every month, every year, year over year, in any market conditions. It's not sometimes, it's as often as you decide to trade. This does not mean every single trade. If every single trade that I did worked, then I would never have to size myself. I could risk my whole account in every trade or every day or every week. And I don't do that. And that would be silly and that would be foolish. Nor do I tell other people to do that. If someone comes and they have $5,000 to risk to trade options, you could trade options with $2,000. You can open up an account. It doesn't mean you should risk $2,000 in one trade, and you shouldn't even risk $1,000 in a trade. Okay. So at the end of the day, the thing is that you have to look at it as, again, chunk it, chunk it, chunk it, chunk it, chunk it, chunk it, chunk it out. It's consistent gains, not sometimes. You take an account, if it's small, you can build it up. You have another account and you get to it and you build it up. That's how you do it. It's building it over time. It's just like anything really that you would do if you think about it. Like if you were playing a sport, when you first learned the sport, you probably weren't very good. Then you learned the sport and you got good because, like, for example, say you were a golfer and you started golfing and you started playing more and more and more. You took lessons and then you got better and better and better. And over time, over the months and over the years, you became this excellent, excellent golfer. It's similar to trading when you're doing the same thing over and over, and a lot of people just don't do it. The reality is that you've got to get to the point where you are actually doing something that consistently works so you can build your account, whether you have a small account or whether you have a large account. Now, going back to what I was saying here in 2021, this is the QQQs. So remember, I just told you 2021 was a very, very, very bullish year. Here's the beginning. And 2020 was bullish too after the drop off in COVID. Oh, actually here, I do have it in here. So this is the COVID drop. See it? Right in here. Then we had a gap up here. This was April. Now I'm going all the way back, April 2020. This is almost 2 years ago. Take it to the right. Look here. I said we basically doubled in price. Look, we did. So this was the QQQs in April of 2020. Now go up where we were here in November. We went over 400. So we actually did double from April of 2020 to November of 2021. This was here, the last time I made a new high in the Qs, the market double. So that's why really, even though we sold off here, again, like I'm saying this, we're not in a bearish market here whatsoever at all. We're just not. But it is scary for people because from this number, from 400 to lose almost 100 points is scary to people. Okay, it just is. But anyways, getting back to what I was saying earlier about people buying the dip as a strategy. Here was the beginning of 2021. This is January. You can see how we just kept going up, up, and then the summer. Look at the summer of last year. Summer of last year was really bullish. And then we lifted here into the fall. This was the next push up. Remember this? And this was actually when the election was. A year after. So, I mean, it really was just one of those times where, I don't know, it seems like every time after the election, we do have a bullish move. Let's find November 2020. So here's November. This was November 2020. We were right around 290. Yep. And then here we were. That was 100 plus points. So from here to here was 200 points. From November 2020 election was over 100 points. Look at that. So that's the market, the whole last 18 months since COVID. So how do I make money trading? What do? I trade gaps. Now, what is a gap? A gap is a difference between the close and the open. The US stock market opens every day at 9:30 and then closes every day at 4 o'clock. So there are something called after hours trading, which is post-market trading, and pre-market trading, which is in the morning. I do not trade that. But that is when the gap is occurring. So again, what is a gap? A gap is a difference between the close and the open. You have bullish gaps, you have bearish gaps. Gaps happen every day in the market. Gaps happen every day in stocks. There are thousands and thousands and thousands of things that gap. So how do you know what to trade? Well, I determined and created a system that took me about 3 years to determine what stock is going to have a big move in the gap. And that is how I determined how to trade it, whether I'm going to go long it or whether I'm going to short it. So I go long stocks and I short stocks, but I will tell you that I prefer to short. We were talking about, how do you become consistent? Part of it is for me, not just focusing on one strategy, which for me is the gap, which we're going to talk about here, but it is also about the fact that I do go to the short side first. So I have found that focusing on selling, shorting really has given me an edge in the market because many traders do not know how to short. Again, we were just talking about buying the dip. Many people are comfortable with that. They're much more comfortable. Retail traders are more comfortable going long than they are going short. I personally do not know why that is. But again, having a business as long as I have, I've noticed that myself. People are just more comfortable going long until they learn how to short and until they learn actually how to short and can see how exciting it can be. We've seen since the beginning of 2022 how profitable shorting can be. Again, today is a wild day. We'll look at how we close after 4. But today the market actually gapped down. So again, the market opened today lower than where it closed yesterday. Where is the market going to gap tomorrow? I don't know. I never know until I get up in the morning. So there is pre-market trading, there's post-market trading, and that is where the gap occurs. What happens during that time? Institutional traders, big positions are put on and off during that time. I don't predict the gap. Like I'm not predicting where we're going to gap tomorrow morning in the market, even though we're going to look at it. I'm predicting where it's going to go if it gaps up or down. And so I see it in the morning when I get up and then I make a prediction. What should we do? Should we short this? Should we go long this? Okay. Again, I personally prefer to short. I think that gives me a niche, but it actually just is something that I find is advantageous because panic comes in when a price of a stock goes down. And that is something that can happen lickety split like that. Very, 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 very fast. Whereas when something's going up, if a price is rising in something, and actually oil is an exception. We'll look at some oil stocks. It's very rare that something will continue up, 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 up very, very fast. So you'll have almost like climactic moves down, but it's rare to see panic buying up. I do think you've kind of seen that in the oil market though, in the recent days, where it just seems like it's going straight up. And again, this has to do with what's happening overseas, but you've seen bullish gaps in oil stocks where the price continues to rise. And it's kind of like panic buying where things just keep going and going and going, okay? Any questions here so far? Okay, let's talk about what is a gap. Again, a gap is a difference between the close and the open. This is a chart of Netflix. Now I'm going to go back here to January. This is before the earnings. We'll talk about that gap in a minute. This stock closed here at the beginning of the year. Feels like a long time ago. Price, if you can even believe it, this is where the price of Netflix was to start out 2022. It was well over $550. Then it gapped down here, boom. So it closed here, right around 550, wherever it was, and opened down here right around 540. Fell, boom. Then it closed here. This was before the earnings, right around 500 and change. Gap down here again, where around 390. This had earnings on this night. It was a Thursday night, and the stock tanked. So this is a gap down. This is a gap down. They look different, but they were both good gaps, and you could have shorted them, and we did. The date of this was February 21st, which again, that seems like a long time ago, but it wasn't even where the price was at the beginning of the year. So those are bearish gaps. Let's talk about bullish gaps. Here, this was back again, date in here was February 28th. Oh no, it was January 28th. Closed here, gapped up. So we closed here, again, we're on Netflix, around 370 and change, whatever, gapped up here, rallied, ran up through $400. So this was back the end of January. So first we had this, that was January 21st, we gapped down. Then we had this was a bullish gap, it gapped up. So again, a gap up is the difference where the close and the open is a higher price. Down here, the close was here and the open was a lower price, okay? So you have many gaps in Netflix, a million here, look at them all. Every single one you could go through, analyze in the morning, go through the process, rate them, determine, do you want to go long it? Do you want to short it? Do you want to do nothing? Okay. Sometimes there's nothing to do. Sometimes it's okay to not trade at all. That's okay too. If there's no good setups, no good gaps, you do nothing. Let's talk about Facebook. Again, it seems like a long time ago here. Facebook was up here at 320, closed, gapped down, open. Open here around 235 and change, fell, boom, fell. Again, when was this? February 3rd. So this is more than a month ago. This collapsed out of the sky from earnings as well. Another really big market stock that was a disaster, quite frankly, on the earnings to start out the beginning of this year, 2022, because this stock again was up here and lost basically 100 points from the earnings. Now, is every gap I do something like this? No, we did this little guy over here. We did this trade. I did this. This wasn't like some monster gap. We did it. Boom, it worked. In fact, I think we were in it beforehand. But anyways, I'm showing you here, again, the power of the gap and where this went since that point. If you wanted to do an option or a swing trade even, this was at 230. Okay, remember this is February 3rd. Boom, 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 boom. This just fell off a cliff. Low in here on, this was the 24th of February. It broke 200, it was at 190. So again, this is momentum and really shows the power of the gap in this case here particularly, and also Netflix too. Okay. Let's talk about what is a gap. Let's go over the SPY. Again, the SPY looks a little different than the QQQs. Why? We started out the year in a gap up in the SPY. I'm going to take it all the way over. Remember, I told you the last time the QQQs made a brand new all-time high was November 2021. Not the case with the SPY. Not the case at all. Again, this seems like a very long time ago. Take it over. We didn't get to 500. We tried to get to 480. The last new high in the SPY was the beginning of January. So we actually did make a new high in the SPY this year, 2022. But again, that was a very long time ago. We're in March. So we've had a lot of gaps in the SPY, gaps you could have played. Let's take a look at it. This one closed here, gapped up. What happened here? This is a bullish gap. So the stock price or the market, this is the ETF for the S&P, gapped up overnight. Theoretically, you could have gone long there as a day trade, got in, got out. I did not go long this as an options trade. I don't know if there was any profit to do that in there or what the profit would have been. Now here was a gap down. It happened immediately after it closed here, gap down. This started the sell-off that really took us down here. This was in the middle of February. We have never recovered from that. Look at the slide that we had here. Again, how did this happen? We're gapping down. We're following through with selling. It's selling. Here's another gap here. Closed here, gap down, fell. Closed here, gap down, fell off a cliff. Now today here in the SPY, we opened neutral, but we did open down in the Qs. And again, we'll see where we close here in 15 minutes. So gaps happen every day. It's not about finding gaps. There's thousands of them. It's about finding the very, 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 very specific ones to trade. You only need one good trade a day. If you can find one good trade a day, you can make money. You could do as an option, you could do as a day trade. Okay. Either way, it's the idea of finding one good one and then just adding size onto it, size. So what do you need to make trading work? You need a strategy and something that sets up consistently in the market, and you've got to have something that moves. The stocks that I just showed you, the charts I just showed you were daily charts. Those stocks moved. You can't really make any money, in my opinion, doing penny stocks. You have to take way too much size and way too much risk in stocks that don't have enough volume. So we do not trade penny stocks. I'm trading stocks that are companies that they have earnings reports. They have tons and tons of volume. They have momentum. They move. You know what the products are, the things they produce and what they do. And so I feel there's a safety in that of being in something that has a lot of volume, particularly options when we're doing options as well. But you have to have something that you're looking for, like I'm trying to hit a bullseye every day. I take it and I'm trying to hit that bullseye every day. The chances of me hitting one bullseye a day are pretty high. I got done telling you around 80%. The chances of me hitting bullseye, 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 bullseye all day from 9:30 to 4, the odds go down. I'm probably not going to hit a bullseye every time if I throw a dart all day from 9:30 to 4 o'clock. Do you understand? That's why, again, trading success has to do with honing it down to intricate details so that you can just find one really, really good thing that's going to move and a volume of momentum that you can add size to it to make money, to chunk it out. The concept we were talking about the consistency, about trying to build up your account. But for me, it's just about the reliability in my gap system and then sticking to one thing. So if you're sticking to buying the dip, you're losing all year. Literally, unless you're getting out with very small profits in the small rallies that we've had, none of which have held since the beginning of 2022. And so I think that is difficult for people when they're so used to doing something that worked even for 12 months. And 12 months isn't nothing, but really trading is something that you should undertake and undergo, that you want to do for years and years and years and years and years and a long time. Not something that should be just a shot in the dark, or where you're gambling, or where you're doing something just periodically. It should be something you're saying, I'm going to do this thing and it's going to work and I'm going to learn it and I'm going to do it over the course of my whole lifetime, and I'm going to do it for short-term trading, and I'm going to do it for long-term trading and everything else. And that's how you really get to the point where you're making a lot of money and you're building your own personal wealth. And in reference to what I was talking about earlier with 401ks and what's been happening in the world and the economy, If you understood what was going on in the market and you understood how to read a chart and analyze it, you could even be looking at what your investment advisors have you in reference to your 401ks. And usually they're in different funds that may have different stocks in them. You could look at it and pull up the charts and say, what's in this fund? I want to know exactly what's in it. Apple, Amazon, what? NVIDIA, ask them. You have a right to this information, and you can look at every chart and make a decision and determine if you think that this is something that you even want to be in, that you even want to be in at all. And so again, it's your money. I always found the best person to make the best decision about your own money is you. But I think a lot of people lack confidence and they do not trust themselves. And people's confidence really goes down the toilet once they start losing money. And then people start losing more money because they really just do not know how to do. And they get frustrated and they get angry. And the reality is what they did probably never really worked consistently. And it's hard for people to take a step back to that and learn something new. So anyways, for me, I have a checklist that I go through each and every morning in the pre-market to go through my daily picks to find the best thing to do. I do not know what I'm doing tomorrow, and I won't know until I get up in the morning. So every single day, I may do a different stock. And I don't trade the market every day either. If the market has a good gap, I'll look to do it, but I'm not trading it every day. I'm looking at it every day though. You also need a method and structure to enter and exit. That's another thing. You can't get in something and stay in it forever and ever and ever and ever and ever. What I'm doing, the gap trading, is based on something called momentum. Again, we talked about volatility. With volatility, you get momentum as long as you get in the right direction, but you can't forget to exit your trades. We get really good entries where we're in options time pretty good, where we're early, so that whether we get out right away or hold really is neither here nor there because the momentum is on our side. But you've got to know where you're exiting trades. For me, for the day trades, I like to be in and out quick between 9:30 and 10 a.m. Eastern time. I'll get out of an option the same day if it goes the same day, but I might end up being an option for 2 or 3 days if I'm waiting for it to go, because again, I want the momentum. I'm trying to see momentum. What is momentum? In a stock that gaps up, I'm looking for the momentum to go up higher, buying, money coming in to buy the stock up. In momentum in a gap down, I'm looking for selling or shorting, which pushes the price down. Again, we've seen that in the market. So again, everything I'm doing is momentum trading. And what I find interesting too is a lot of traders don't know how to momentum trade. And in this particular market, again, the market that we're in 2022, they don't know how to momentum trade. And it's important because really that's the only way you're going to make a lot of money as one individual with a small account. And I mean, you can get big moves, $2, $3, $4, $5 moves, even in something like the market, or $20 moves in something like the market, which is real momentum. And you could have 1,000 shares of something and have a humongous day. It is about getting the momentum. That's how you get somewhere with this, where you can have a larger account and build it up. And what the benefit is that you can pay yourself and then risk more once you grow your account. Any questions here so far? So anyways, you know, if you know what someone's going to do before it does it, it's great. I'm not predicting the gap. I'm seeing the gap. So I let the gap happen. Then I predict where it's going to go on that particular day, on that day. Okay. So again, it's 3:50 Eastern time, Tuesday. I don't know where the market's going to gap down tomorrow. I can give you the scenarios and tell you what it's going to do based on these scenarios. But the reality is, if I get up in the morning and I see the gap tomorrow, then I will predict where it's going to go in the day, tomorrow being Wednesday. Now let's talk about day trades. So here were some day trades that we did in the last month. I do use my gap system for day trades and for options. The benefit of the difference is when you're doing day trades, you need to have a margin account. When you're doing options, you don't need a margin account. So if someone, like I said, only has $2,000 or $5,000, you can open up an options account because all you pay is the cost of the option. When you have when you want to day trade, you have to take the position and you need something called buying power to take the full position, and you need a margin account. The broker is giving you buying power. It doesn't mean that that's the cash amount. It means you must be in and out and flat before the end of the day. If you do not know what a margin account is, you can call a broker and ask them. You can trade US stocks from anywhere in the world as long as you can open up an account to trade US stocks. Again, when we're doing day trades, we typically look to short. I will short, I will go long. It's both that I like to do, but I do prefer to short, quite frankly. Now let's look here. This is the price of Zoom. In fact, I have not looked at this actually for a little bit here. It looks like this was today's Zoom. Oh no, that was yesterday's Zoom. I'm sorry. I don't know where this is today. This was where it was yesterday. So let's take a look at the day that we did. It was 3-2. 3-2. So we entered the trade short. Oh, I don't know why I have the 0 there. Originally, I had 800 shares. Sorry about that. This is supposed to be 800. So I entered the trade short at 117.50 with 800 shares. Then I doubled my position sizing. I doubled it up to 1,600 shares. I added at the same price, okay? So my average price was the same. Why did I do this? I'm going to show you the 1 minute in a minute, because I thought it was going to drop lower. So I wanted to take more of the trade because I only had 800 shares initially. It had a nice drop. Remember, I was just talking about momentum. So this is almost $3. So entering at 117.50, exiting at 114.75 is almost a $3 drop. That's a nice move. Even if I had kept the original 800 shares, I would have made half that. I would have made over $2,000, but I added, because I really liked it, profit 4,400. So here, this was 3-2. Let's look at the daily 3-2. First, we're going to look at the gap, and I'll show you the 1 minute. So this closed here, this gap down, this tail is what we shorted. And again, I'm going to show you the 1 minute chart. So even look at how this closed, which is really funky here. We made money shorting this. We got almost $3 out of it. Remember, I was telling you about hitting a bullseye. This is what I'm talking about. Boom. You just go after it. You find that little hidden nugget. So this closed here. It gapped down. I liked it to drop. It did. We got into it early. We got the drop. Boom. And then you get out. Because again, you have to get out. And particularly if you're day trading, this was a day trade on margin, you must book it. I'm never holding a day trade overnight. But anyways, that was supposed to be 800 there. So I doubled up. Let's look at the 1 minute. So here was the day. So this was 3-1 over here. This is 3-2. That's the day we shorted it. Now, again, we got in this a little late. I shouldn't say late, but a little late. Okay. But here, like normally I would have been in this earlier. We could have gotten in this up in the 120s. I don't remember why I didn't do this early on the day. Anyways, we ended up getting in it roughly right about in here. And then here's the drop. Boom. So this is what I call the money move. Remember, we were talking about momentum. Here is momentum on the 1 minute in Zoom. It's falling. This is to the downside. Okay. So we can look at Zoom and see what this is doing today. This is another stock that has been absolutely clobbered really in the last few months as well. A stock that you would have thought would continue up and up. So many people are still working from home. Again, I don't follow the fundamentals. I really am a technical person. I'm looking at the chart and averaging, looking at the advanced technical analysis to look at the chart. But some people love fundamentals. Like they love stuff with this. But I will say, even though I don't follow that or make trading decisions based on fundamentals, it is kind of surprising that Zoom has tanked. I guess part of that is the market too. Let me see a question here. What would be the recommended account size to generate average 20% return monthly? Again, I don't work off of percentages. So let's talk about two things. We're going to talk about return on investment and risk to reward. First of all, if you're looking at a return on investment, on average, I'd say 50% to do an option is a good return on investment. So for example, if you're taking a risk in an option of $1,000, what's a good risk? $500. I mean, a good return on investment, $500. Do some trades go more than that? Absolutely. But if you want to be conservative, you could set your sell order at $500 if you risked 1,000. So I don't go by percentages as far as account size because I'm not a long-term investor. I think you're thinking long-term investments. I look at return on investment for my options, trying to get 50% or more. Ideally 100% of my trades. And when I'm doing day trades, which I'm doing on margin, it's something called risk to reward, because to take the Zoom trade and I'm just roughing it out here, 1,000 shares of the Zoom trade, you would have needed in buying power. And if you don't understand what I'm saying here, ask me, but I'm going to say it anyways because of the question. You would have needed $117,500 in BP. That does not mean that you would have needed $117,500 in cash. And I'm talking about if you took 1,000 shares, okay? If you had a retail account, you would have needed about 29,000 and change cash to take a full position of 1,000 shares of Zoom to short it, okay? That drop got you profits of what? $3, let's say. So if you took it and you risked 1,000, you could have made 3,000, but you needed 29,000 to take the position. But the risk was not 3,000. So I forget where we put the stop in this. It probably was over 118. So let's just use an easy example. Say I risked $1, put a stop $1 over it, and we took 1,000 shares. You would have risked 1,000 and made 3,000. In that case, your return on investment is 3 to 1. And if you want to look at percentages, it's 300%. But that's not how I look at day trading on margin, because you've got to have that cash there to take the position. And that varies from stock to stock. We did Ford, okay? We did Ford. Ford is way cheaper than Zoom. So you may not need the same buying power for Zoom, Ford. If we do the SPY or the Qs, you're going to need more because of the cost of those. So I don't look at it about percentages, because it depends, one, if you're doing an option, two, if you're doing a day trade, and three, it depends on the price of the stock that you're trading, because you're going to need the cash there to take it. Does that make sense? So I don't look at it exactly that way, TD. I think you're thinking of something like long-term investments. I look at it like I'm getting the trade, and I'm looking for 1-to-1 in my day trades. If I'm risking 1,000 in a day trade, I want to make 1,000. If I'm risking 2,000 in a day trade, I'm trying to make 2,000. If I'm risking in an option 1,000, I want to make 500 to 1,000. Not that I can't make more, but that's what my expectation is. So I don't know if that answers your question, but this isn't about investing. So it's not about taking 100 grand and saying, well, if I have $100,000 in my account, how much can I expect to make in a month? It depends how many trades you take. It depends what your risk is going to be. And you can tell me what you think you want to risk. Say you have $100,000 in an account. Do I think that you should be risking $10,000 in a day trade? No, I don't. Could you? Sure, you could. But effectually, you'd be risking 1/10 of your account in one position, which I think doesn't make any sense. But that $100,000 cash would allow you $400,000 buying power at a broker, at a retail broker, for 4-to-1 margin. And that's a good size account to be able to do any one of the number of things that we're doing: Zoom, BA, SPY, Q, diamonds, all kinds of things that we're trading, because you could do expensive things if you've got that kind of money. You can take 1,000 shares, you can take 2,000 shares. Do you follow me? And as far as options go, same principle. Say you want to do an option, and we will talk about those in a little bit too. Say you want to do an option. Say you want to do an Amazon. It costs $5 grand for one contract, because that's how expensive those puppies can be. Say you say, okay, you could, if you had 100 grand in an account, take 2 contracts, which would cost you 10,000. I still wouldn't do it, because it's 1/10 of your account. I still wouldn't risk 1/10 of your account in one trade. And in reference to an option, that is what you're risking, because it's on cash. It's not margin. You have to have the money there. You can't lose more than you risk, but you are taking it. And many times you're holding it overnight, and you should never risk 1/10 of your whole account overnight in a trade. I hope that answers your question. Do I trade stocks, ETF? Do I trade stocks? Yes, we're talking about Zoom. Zoom is a stock. Do I trade ETFs? Yes, we just talked about the SPY and the Qs. I don't trade futures. So I trade gaps. I do them as options and day trades. What else? I think that's it. Okay. All right, let's talk about another one here. BA. BA is without a shadow of a doubt the chart of the week, the trade of the week. We did the 200 puts, we did the 195 puts, we did the 190 puts, we did the 187.50 puts, we did the 180 puts. And the day I called the 180 puts, I don't think, I got some emails from people where you're saying, are you think this is going to keep going? And it did. It did. BA opened this morning, I think under 170, I think it was 169 and change or something. I don't know what the low of the day was. We can look at this chart. Again, getting back to what I was saying with momentum, it's so interesting to me how people are like, oh my God, that I don't understand. What are you talking about? You know, I mean, again, the reality is that people really that are actively trade just consistently to me, want to do something that's tricky and seems to make no sense whatsoever at all. And what I'm doing to me makes perfect sense. But quite frankly, what I'm doing is actually just using common sense. While I'm actively looking at the charts and reading the gaps, I mean, it is amazing to me how many people want to just go long every dip in the world. They just want to do it. And they're losing all year. So, I mean, if you walk away today from anything at all, stop buying the dip. I don't care what it is. Don't do it anymore. It doesn't work. And I don't care if it worked every day in 2021. It doesn't work. It just doesn't. It's not just not working this year. It full on flat out doesn't work consistently. And that's all that matters. That's all that matters. Think about GME. People made a lot of money doing that at one point. The one time it worked, that's it, done. You have to be consistent with what you're doing. This was 228. 228 is here. Oh, this is really funny looking at this. We shorted this here and it flipped. We got out with profit. The entry was 198.50. Shares was 1,500. Risk was 2,700 bucks. Exit was 196.90. So we pulled about $1.50, $1.60 out of this before it flipped. This is really funny here now looking at this. I forgot what it did. Profit was 2,400. Again, 1-to-1, close enough. My target was 197. Broke it, boom, out. Again, 1-to-1. 1-to-1. So take it over here. This closed here, gap down. We shorted this. This little tiny tail was the profit that we made, and we got out of it. It flipped. But it's really funny here because we did do puts in this, and the puts worked. Look what it did after the fact. Boom. I forgot that we did this day because I was out before it flipped. Here was 1 minute. Stock closed here, gap down, open, boom. We got it. I'm pretty aggressive. If you follow me, if you want to do trial for the room, you can email me, but I just hit it, boom, in, out, done, profit, done. That was a 1 minute, but that flipped. Look at that. I forget what happened there, why that did that. That was a Monday. Yeah, it was the 28th. So again, this would be a trade on margin. So again, you can open up a prop account. What's a prop account? Well, a retail account, you need 25,000 a day trade. You get 4-to-1 margin. A prop account, you're going to get 10-to-1 margin, or maybe more at some places. You need a minimum usually of 2,500 or sometimes 5,000. So you open an account with 5,000, you get 10-to-1 margin, 50,000 BP to trade. So then you can only do as many shares as you can do based on the cost of the stock that we're doing. So that's what, that's what you have to work with. Again, I was talking about it there earlier. How do you make your dreams come true? You got to do the work. I mean, that's what it is. And sometimes the work is, I wish I had $1 million and I could trade I'll just wait till I do. Well, meanwhile, years and years of life have passed you by and many opportunities to trade and just trade and make the money that you want to trade. Instead, people are just like pie in the sky about it. Again, I do not understand this mentality. I've never been pie in the sky about things. While I have big aspirations for myself and big dreams for myself, I consider them goals. So I take active steps towards my goals. That is the only way to achieve your goals. You must have a plan of action and you must take actionable steps to achieve those goals. That's it. Just like if you wanted to stop smoking, you're like, how am I going to kick this habit? You have to take real steps to kick it. You're not just going to get out one day tomorrow and all of a sudden quit cold turkey. You probably get sick. You have to wean yourself off. You have to figure out what to do, whatever the case may be. Or same if you wanted to exercise, you want an exercise program or diet or lose weight. Say you wanted to lose 50 pounds. It's not going to happen in a week and it's not going to happen in a day. And it's not going to happen without doing anything at all. You need real steps to get to your goals and achieve your dreams. The fact is you can take those steps. And the sooner you take the steps, the sooner the things that you want to happen are actually going to happen. Anyways, I use my system going through a 26-point checklist. This is everything you'd learn in the class from me if you decide to do the class. Like I said, it's March 26th and 27th, but ultimately, the niche I have is that I'm looking for large institutional money. BA is a good example. What happened there? Selling, 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 selling. Gaps are created with institutional money, large institutional money. That's what makes the gap in the first place. Even though you have retail traders that are in the market, they're not in control of the stocks and they're not in control of the market. GME is a once-off. And I go back to that chart as a great example, because at the end of the day, they're not controlling it much, because no matter how much people want that stock to go back up to $500, it ain't ever going to happen unless institutions come in and buy it, or it ain't ever going to go there again. And people are waiting for it to go there, and they're long the position. And some people are in it like at crazy numbers, like $300 or $400, and they're down. So it's institutions. As much as people hate hedge funds, and I don't know why, I don't hate hedge funds, but as much as people hate them, the fact is that large institutional money is in control. It's in control even when you think it isn't. BA is actually a great example of that. The professional gaps that happen and play out in stocks are formed by one thing and one thing only: large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap, long or short, and confirm that the large money will flow with it. So again, how much money do you need and what kind of returns can you earn? 1-to-1 on day trades, and ideally 1-to-1 in an option, but I'll take 50% in an option. I think that's a fine return on investment. Again, if you risk $2,500 in an option and can make $1,000, $1,200 in a day, what's wrong with that? What's wrong with that? Nothing. Now, again, how much money you need is you need $25,000 at a retail account to trade on margin, or prop, you can open it up with less. You can go anywhere that you want. I would do normal research on the companies that you want to go and open up an account with. And I would also practice, like I said in a demo, if you've never traded before you press the button, as far as, you know, what is better for you, you have to look at your time. How much time do you have to devote to trading? I trade in a day trades in the morning between 9:30 and 10. If you can't be in the live room, then you can't day trade with me. If you want to do options, like I said, you could have a regular job, do anything. You don't have to sit at your desk all day. So really how to trade or what methodology to use my gap system really depends on your own schedule and how much time you have to devote to trading. Obviously, the amount of money that you have, cash, determines the size of your positions, and you can be more flexible if you have more money. So for example, say you have an account where you have 30 grand in it, you could take 2 or 3 or 4 or 5 contracts in an option, for example. So you could take 4, you could take 4 spies, get the drop, you're in a put, get out of 2, hold the other 2. Same thing with Boeing. You could divvy up your position. If you could take more than 1 contract, then you can have the flexibility of doing that, okay? Book some, get the drop, hold a little more, get the second drop, okay? So that's